What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on cruise ship company Carnival Corporation, symbol CCL. And when we take a look at the chart, we're simply going to be assessing two things. One, what's the direction of the trend? And two, are there clues in the chart of where the big money might be patiently waiting to buy at lower prices or patiently waiting to sell at higher prices? So let's get right into it. Let's assess the trend. The way we'll do that is we'll look at the highs and the lows, the two most recent highs and two most recent lows. And the two most recent highs, as they're moving from left to right, are heading higher, and the two most recent lows, as they move from left to right, are also moving higher, and that's the definition of an uptrend. So we'll move on to step two, and we'll go to try to find a couple support levels. And there's a support level right here in the 30.01 to 28.08 price range. And there's another support level right here in the 24.37 to 21.61 price range. So two support levels to consider. Now let's go see if we can find a couple resistance levels. And this gets really interesting, okay? Because our first resistance level is right here between 29.93 and 31.46. So we are currently at the higher end of that resistance level, okay? So we've been chipping away at that resistance level for several weeks now, and we almost broke through it completely on Friday, okay? So if we can break above there, then there's no technical resistance on the weekly time frame all the way up until we get to this level here between 41.68 and 45, okay? So there's a couple ways to consider entering the trade, because if there is no technical resistance in the chart, this is Carnival Cruise. That doesn't mean it's going to be clear sailing ahead right to 41.68. But it does, there is a clue here that there could be relatively calm seas as we continue to weave our way higher to 41.68 or somewhere in that price range. Okay, so if that's the case, if we don't have a whole lot of resistance technically in between these two price points, you might think about entering CCL for either a quick trade or an entry price with a lot of reward potential for a longer term position. Now, this is not financial advice. I'm just looking at clues in the chart. But there are several ways you can consider constructing this trade if you're so inclined. One way would be to place a market order on Monday, right around current price. Protective stop, let me draw this a dashed line where protective stop should be, and that'd be just below that resistance level, this red dashed line right there, okay? So that would be our protective stop, just below 28.08, and then your target could be all the way in front of that next higher resistance level. So that trade right there, as it's constructed, which doesn't have a lot of price sensitivity in it, like I said, that would be buying with a market order on Monday. If price is anywhere near where we close on Friday, this trade setup right here would have a 3-to-1 reward to risk ratio, almost, okay? And that's a very favorable reward to risk ratio. Now, if you wanted to be a little more price sensitive and wait for a pullback to the support level for if price were to do something like this, pull back to the 30 price range, bounce off that, and then start working our way higher over time. If you wanted to get an entry that was a little cheaper in price and also had more reward potential, let me pull that entry price down and see what that would look like. So we pulled that down to right at like 30.03, we'll call it. Then we get a 5-to-1 reward to risk ratio. In other words, for every $100 worth of risk you take, you could potentially have $500 of reward, okay? So a couple different ways to consider your entry. One would be a market order, and that would be about a 3-to-1 reward to risk. One would be a pullback to the top of the support level, and that would be about a 5-to-1 reward to risk ratio. Or you could simply pick your spot anywhere in the green shaded area here, right in that support level. Now to have even a higher reward to risk ratio, okay? So several ways to consider an entry in CCL now that we're in an uptrend and nearly breaking through a resistance level and the next weekly resistance level at much higher levels, okay? So let's wrap up today's session. Hope you got some value out of the session. I'll be back each day this week, or at least several more times this week, for more technical analysis. In the meantime, wishing you all the best of luck in your trading and investing, and we'll see you